Good morning. Can you hear me?
Yes, sir, we can hear you.
All right, great. So good morning once again and welcome to today's class. We've been dealing with property, plant and equipment for the past 2 weeks. And this is the last week that we're going to be dealing with property, plant and equipment. So last week we were looking at land and we were looking at how you would revalue land. So we went through those slides. We haven't yet finished them, but hopefully we'll be able to finish them today. But before I start with today's lesson, are there any questions that you have? Perhaps you've gone through the material and there's something that you do not understand. Okay, it seems that there are no questions, so then we can just continue with today's lesson. I will be organizing a tutorial, a session for you where we have someone from Deloitte. So the tutorial session will be on Friday at 5:30 in room 207. So it will be a face-to-face tutorial. Okay, there's a hand up. Hendrina, you want to ask a question? You may go ahead. Unmute your mic.
So the other time when we were doing the other example, like like at the time when there was an example, when she was doing we were doing a class example.
Go ahead.
There was something about, but then when she wrote like
I'm sorry, I can't hear you. With the revaluation surplus, I just heard revaluation surplus, but what else are you saying? I couldn't hear you properly. It was breaking up. You can unmute your mic and go ahead.
Doing like an activity in the class, it was written cash, but when she wrote in the journal, she wrote like bank. Are we like gonna be penalized if we do something like that?
Okay, when a transaction is in the question, if it says bank or it says cash, it just means that it's a cash and cash equivalent. So we just normally write bank because realistically, no one is going to pay, for example, 100,000 in cash. Okay, so the journal entry will just write what we just normally write bank. So just write bank. But bank and cash both are cash and cash equivalents. Okay. So, okay, I think we can move on from that. So let us look at what we're going to look at today. I will share my slides. Okay, we're dealing with property, plant and equipment, and specifically land. That's what we were dealing with last week. We talked about how you can the cost, the modules that can be used, either the cost model or the revaluation model. And we were looking specifically at the revaluation of land. We did a couple of examples where we did an increase in fair value of land as well as a decrease in fair value of land. So those increases and decreases in the fair value of land, when we looked at them, we just looked at where there had been no prior revaluations. All right, so now we're going to go ahead and look at what happens if there has been a prior revaluation. What happens if there's been a prior revaluation? That is what we're going to start with today. And remember, I told you that you can actually look at this representation to help you understand what you would do when you have a revaluation surplus or a revaluation deficit and you had a prior revaluation of land. Did we deal with this example? I don't think we dealt with this example. Example 3. Okay. We haven't dealt with example 3, and that is what we're going to deal with now. The question is as follows. Land with a carrying amount, fair value of 120,000 is revalued to a fair value of 70,000 on 1st of January 20x2. This land originally cost 100,000 and had been revalued to 120,000 on 1st of January 20x1. So that is the question, or that's the scenario, and the question is as follows. You're required to show the journal entry to account for the revaluation on 1st of January 20x2. Okay. Let me share my Excel window. Okay. I'm sharing my Excel window, but I'll go back to the question just to pick up the important points in that question. All right, so let us just write down from the question what we were given. We're given a cost price. The cost price that we're given is 100,000. And this cost is at acquisition date. We don't know when the acquisition date is, as that was not provided in the question. Further, the question goes on to state that it's revalued to a fair value of 70,000 on 1st of January 20x2. Okay. That was 70,000 on 1st of January 20x2, and we're given one more figure that it had been revalued to 120,000 on 1st of January 20x1. So on 20x1, it had been revalued to 120,000. These are the figures that were given in the scenario. Okay, so what is the required? Show the journal entry to account for the revaluation on 1st of January 20x2. So we have to show journal entries to account for revaluation on 1st of January 20x2. Let us start with the journals for 20x1. Although we're not required to prepare the journals for 20x1, let us prepare the journals for 20x1. Can you help me with the journals for 20x1? If you had to account for the journals on 20x1, what would we have done? How would you account for the revaluation? Anyone? So let me highlight the information that is relevant for 20x1. We have a cost and we have that revaluation on 20x1. This is not required, but I want us to prepare this so that once we go and prepare the journals for 20x2, you have an understanding, a clear understanding of why we actually prepared those journals in 20x2. Okay. So what would we do? What would be the first step? 20x1. Is land increasing or decreasing in value? Is the land increasing or decreasing in value on 1st of January 20x1? I'm waiting for input.
Increasing.
It's increasing in value. So if we want to reflect that the land is increasing in value, what journal entries would we do? What are the journal entries that would post? Land is what type of element?
Asset.
Assets. And assets
Yes.
increase on what side?
The debit side.
The
The
debit
debit
side.
side.
Exactly. So since land is increasing, we're going to have to debit the land, and land, we said, is an asset, and assets appear in the statement of financial position. So what is the increase in value of the land on 1st of January 20x1? What is the increase in value? 20,000. So Justina
20,000.
all right. Justina Iter gives the journal entry: debit land with 20,000 and credit revaluation surplus 20,000. Exactly. That's 100% correct. Debit land with 20,000 credit revaluation. 20,000. Now revaluation surplus, where would we place the revaluation surplus? Where would we place the revaluation surplus?
Under other comprehensive income.
Exactly, under other comprehensive income, OCI. And then we can just put our narration. That's the revaluation of land on 1 January 20x1. Okay, so we were not required to provide the journals for 20x1. However, we're required to provide the journals for 1st of January 20x2. So let me just do some workings. You always have to show your workings to gain marks. If your journal is wrong, for instance, but you have done workings and you've used those same figures, whether they're incorrect, from your workings and you've posted in the journal, you can gain principal marks. So just make sure that you always show your workings. So our cost at acquisition was 100,000. And we had a revaluation on January 20x1. That was 20,000. And our fair value on 1 January 20x1 was 120,000. Okay. So this we were given, and we were also given the cost price, the cost at acquisition we were also given. 20x2, it says that the land is now revalued to 70,000. So is there a decrease or an increase in fair value from the current fair value of 120,000 on 1st of January 20x2? Is there increase or decrease in fair value?
A decrease in fair value.
Decrease. A decrease of how much?
Of 5,000. 50,000, sorry.
50,000. So a revaluation? Sorry. This is 120,000 minus that. That's 50,000. Okay. So we have a revaluation on 1st of January 20x2, and this is a balancing figure. So it's a downward revaluation, which we can consider a revaluation expense. Let's just say, let me just do it this way. Are we fine with the workings so far?
Yes, sir.
Okay. So, Penna Helfer says she cannot hear me. It's probably a problem on your side because the other students. So you'll probably have to watch the recordings. It's a network issue on your side. Can you help me with the journal entry on 1st of January 20x2? What accounts are debited? What accounts are credited? Can you help me? 1st of January 20x2, what are the journal entries? We've done all the calculations. So Justine says debit revaluation expense with 30,000 and credit land with 30,000. Where'd you get the 30,000 from? So I say debit revaluation expense with 30,000, credit land with 30,000. So let me just write what you said, debit revaluation expense. Where would you show your revaluation expense?
In the profit or loss count.
Okay, statement of profit or loss. Land is an asset. It would be in the statement of financial position. Do you agree with this journal entry? The rest of the class, do you agree with the journal entry?
Yes, sir.
Yes. How'd you get the 30,000?
No, sir, I don't agree.
Okay, who doesn't agree?
Me, sir, I'm confused. Why are we recording it with 30,000 instead of
I'm asking.
50,000?
That is what I'm asking. What journal would you have? What journal would you have?
I would have revaluation expense debited with 50,000 and land with 50,000, credited with 50,000.
Okay. Debit revaluation surplus. Debit revaluation expense 50,000 and credit your land 50,000. Class, do you agree with this journal entry? Do you agree with the journal entry? Okay. Justina agrees. She says yes. The rest of the class, do you agree with the journal entry? Kavi Hore Rua says yes. Taina says yes. This tells me that you didn't even go through the material because the answers are in the slides, right? The amounts that you've given me are correct. 50,000 is correct. However, the journal entry is not correct. And the reason for that, a part of the journal entry is correct, whereby we show the land has reduced in value by 50,000. This part is correct. Revaluation expense journal was initially correct, where the amount was mentioned as 30,000. Okay. However, we're going to have another journal called a revaluation surplus 20,000. Okay. So why is it done in this way? So the theory states that once we have a revaluation deficit should be recorded in the statement of profit or loss. All right. So the revaluation deficit or revaluation expense is recorded in the statement of profit or loss. However, if there had been a prior revaluation surplus, you first have to reverse the revaluation surplus that existed, and then the excess will then be recorded as a revaluation expense. So remember when I gave you the required said prepare the journal entries for 1st of January 20X2, but I'd asked you to prepare the journals for 20X1 first. And the reason was so that I could show you in 20X1, there was a revaluation surplus of 20,000. Okay, that is the journal entry that we did in 20X1. So now when we come to 20X2 and we have to record the revaluation deficit or the revaluation expense, we can't account for the whole revaluation expense as the 50,000 that we calculated, right? Because first of all, we have to reverse the previous revaluation surplus that existed, the one that was in OCI, and then any excess of that amount is taken to the statement of profit or loss as a revaluation expense. And the excess in this instance was 30,000. Is that clear? Just hold on, I just have to change my mic. It's not working.